Revenue's up, so why are you poorer? Simple. Your costs grew faster than your prices. If you're a business owner in Winnipeg, you know exactly what I'm talking about. You're working harder than ever, you're selling more, but at the end of the day, your bank account is actually shrinking. Let's break down exactly where your money is going, and more importantly, how to get it back. So, let's look at the numbers. According to Float's 2025 report on Canadian businesses, your top-line revenue is up on average by about 5%. You're making sales, you're bringing in cash. On paper, that looks like a win, right? But that is only half the story. Because here's the gut punch. While your revenue went up 5%, your actual profit, your EBITDA, which you actually get to keep, went down by over 1%. Yeah, you heard me. Sales are up, but profit is down. This isn't just you, it's a systemic issue. The money is literally vanishing between what you sell and what you bank. So this is the only question that matters right now. Where did the money go? Because if you can't answer that question, this trend is going to bleed your business completely dry. This thing actually has a name. It's the profit paradox. A margin squeeze that's crushing businesses all across the country, and it's only going to get worse heading into 2026. Look, you're not alone in this fight, but that doesn't make it any less dangerous for your company's survival. Just look at that gap on the screen, a 6-point disconnect between your sales and your profit. That is the whole problem right there. You are running faster and faster just to fall behind. This gap is the black hole where your profit disappears. The best way to think about this is like a plumbing problem, you know? Your profit isn't just vanishing into thin air. It's escaping through 3 very distinct leaks in your operations, and we've got the data to prove where they are. Leak number 1 is the most obvious and probably the most painful, your cost of goods sold. The median cost for your inventory and your suppliers has absolutely exploded. It's up a staggering 33%. Everything you need to build your product or deliver your service is costing you 1/3 more than it used to. Week number 2 is labor. Now, even with the market supposedly cooling off, average hourly wages jumped another 3.5%. For most of you, this isn't just another line item, it's your single biggest expense, and it just keeps climbing, no mercy. And the third leak is the silent killer. I call it the overhead tax. All the software, the subscriptions you need to run a modern business, they've become this massive, non-negotiable expense. SaaS spending is up 26%. It's a tech tax that's just eating away at your margins every single month. Alright, enough about the problem. You're here because you want the fix. So here it is. This is the 5% recovery playbook. 5 direct, no BS moves you can make right now to plug those leaks and take back your margin. Let's get right into it. We're going to start with pricing. Stop thinking about raising prices as this scary defensive move. It's not. It's an opportunity. In fact, it's the single fastest lever you can pull to directly impact your bottom line. Now, a proper pricing audit has 3 steps. You don't just slap a new number on things. First, you segment your customers. Not everybody is the same. Figure out who gets the most value from you because they're the ones who will pay more. Second, test the timing. When is the right moment to roll out a change? And third, you have to frame the value. Never ever just announce a price hike. Explain why. Remind them of the results you deliver. And if you need a little motivation, here it is, straight from McKinsey. A tiny 1% improvement in your pricing can boost your profits by up to 11%. Let that sink in. This is not about making massive, risky changes. It's about surgical precision. Next up, we attack that 33% explosion in your cost of goods sold. It is time to put the squeeze on your suppliers and on your own internal waste. So here's your action plan. 1. Get on the phone and renegotiate every single supplier agreement you have. 2. Start sourcing alternate suppliers. Give yourself some leverage. 3. Run a formal waste audit to find every scrap of material you're losing. And 4. Optimize your inventory. Cash that's tied up in surplus stock is dead money. Now for your biggest expense, labor. Listen, this is not about firing good people. It's about getting the absolute maximum value and productivity from every single hour you pay for. 4 actions. Optimize your schedules around your busiest times to stop paying for downtime. Maximize team utilization. Are they actually doing revenue-generating work? Clarify every single role to kill off redundant tasks. And finally, enforce strict overtime controls. Overtime should be a rare exception, not a weekly routine. Okay, let's talk about that 26% jump in SaaS and overhead. It's time for a purge. Every subscription, every reoccurring cost is now on the chopping block. First, audit every single piece of software you pay for. Find the redundancies, the unused licenses, the tools that do the same thing. Second, look at your utilities. Implement some basic energy efficiency measures. And third, create a leak list. Go through your expenses line by line and question every single thing that isn't absolutely essential to making money. Your cash balances are down almost 5%. You know why? Because you're funding your own operations while you wait to get paid. We're gonna fix that by speeding up your cash flow. This is about getting your money faster. 4 simple steps. Tighten your invoice terms. Net 30 is over. Move to net 15. Require deposits on all new work, no exceptions. Use progress billing on bigger jobs so you're not waiting until the very end to see a dime. And finally, automate your accounts receivable follow-up. Stop wasting your time chasing money that is already yours. Okay, let's bring this all home to Winnipeg. You have some local factors you can actually use to your advantage, but you also have new threats you need to get ahead of. Let's look at the local math. Here's the equation. On one side, you've got an edge. The payroll tax exemption threshold is going up to $2.5 million bucks. That could save you over 10 grand a year. But on the other side, there's a new squeeze. A new retail sales tax is coming for all cloud computing and SaaS subscriptions. So that 26% overhead leak we talked about, it's about to get even bigger. Your local advantage is being canceled. Let's make this real. Talk is cheap. What does a 5% margin recovery actually look like in cold hard cash for a typical Winnipeg business? We'll use a simple baseline. A service business here in Winnipeg doing $1 million a year in revenue. A solid, typical local company. First, we apply the pricing audit. We find a strategic 3% price increase. That's not enough to lose good customers, but it's enough to add $30,000 directly to the bottom line, instantly. Next, we apply the operational fixes, some simple automation to handle AR and scheduling, plus a waste audit that finds just 2% inefficiencies. That's another $20,000 in recovered profit right there. You add them together. That is $50,000 in extra profit per year of 5% margin recovery. That is not theory. That is a concrete, achievable number. It is the difference between struggling to make payroll and actually thriving. You have the playbook. Now, I'm going to give you the tool you need to execute it. If you want the step-by-step checklist that covers every single thing we just talked about, comment the word margin below and I will send it directly to you. Stop letting your profit leak away. It's time to go out and reclaim it.